Good morning and welcome to the Financial Juice live morning briefing with your host, Tony. So I just wanted to start off the day by before we look at the markets, just looking at an article from CNBC. It says March retail sales will look horrible after the coronavirus pandemic forced consumers to stay at home. Now, economists are expecting a decline of 8% in March retail sales, according to Dow Jones, and that compares to 0.5% decline in February. If autos are excluded, so core retail sales for the US, sales were expected to be down 5.2% in March. Economists expect that the mandated shutdowns by many states to stop the spread of the coronavirus has resulted in a sharp and sudden recession. In the second quarter, the economy is expected to contract by 30% or more before turning positive in the third quarter as the economy reopens. So this is, of course, what we have for today at 8:30 a.m. Eastern Time for retail sales. We are going to expect some negative figures coming out of the US. Also, we do have the Bank of Canada interest rate decision. But with the retail sales, if we take a look at the market so far, what we can see, let's have a look at the dollar or the USD JPY. Here's where we sit at the moment. So a lot of the market, so last night, just reaching a key level here. If I just bring it up on a higher time frame, so reaching a level of support here at around 106.794 is where we saw the dollar moving towards the downside. Then it rebounded here. So with retail sales, we'll see what sort of reaction we get, whether from here. We're not seeing too much movement as of yet, but today's retail sales, as I said, are not going to be positive, and that's not going to have a positive effect on the dollar as well. Now, of course, retail sales, this is something that is expected, retail sales to fall. So there may not be too much of a market reaction to this, but again, just keep that in the back of your mind as to where we sit on the dollar. So we have bounced off our level of support here on the USD JPY. Taking a look at another article as well, if we just go to our next one here. So also in the news, we've had Trump or saying that, or in the Science magazine article, so the headline, short-sighted is what the health experts decry Trump's freeze on US funding for WHO as the world fights the pandemic. So Trump didn't specify how much money he intends to put on hold, but he doesn't want to. What he wants to do is to review what the WHO is doing, whether or not they're being effective enough, and whether whether the US should continue funding the WHO or not. No, it's not market moving news. It seems more political here. Again, market reaction, there hasn't been too much. There hasn't really been a market reaction from that headline there. This is when he was having his briefing last night at around 5:30, 5:45 Eastern time. So Trump, so here, if we just have a look at the 2018 and budget to 2019 budget cycle, the US was the largest single donor, providing almost $900 million of the WHO's $5.6 billion budget, which accounts for about 15% of the WHO's budget as a whole. In general, the White House can delay dispersing money already appropriated by Congress for a specific reason, but must get approval from them to cancel such spending outright. So I don't see Congress going ahead with this. It'll be a detrimental for the US. One, you need WHO advisors, not only your own country advisors, but you need WHO advisors and scientists to combat the coronavirus and also work together unilaterally to make decisions that will help curtail the coronavirus spread, and also helped curtail the mortality rate as well. So it's not, as I said, it's not market moving, but it's important to just kind of see where the US sits globally in perspective point of view here. So that's what we can see coming out of the US. Now, if I go back to another article, if I go back to retail sales and the outlook. So March retail sales will dwarf previous retail sales. So the lowest retail sale figure that we got was back in 2008 during the recession, which was at minus 2.8%. So if I just bring up that image for you to look at as well. Here we go. Okay. So this is where we sit currently at the moment so far in regards to US retail sales month over month in its in the history that we can see. So this is back, if we go back to 2008, this is where this is the lowest point that we've reached. Now, if we're expecting minus 8% on retail sales, or decline of 8%, as I said, it's going to dwarf any other retail sales figures that we've had in over the past 20 years or so. So again, just keeping that in the back of your mind of where we sit at the moment and what we've experienced in the past as well in regards to retail sales. Also, if we take a look at oil as well, we're just bringing that up. What we sit, so oil, it dipped down below $20 on WTI, and we're still below $20 at the moment. So this is where we currently sit at $19.72. So if I just bring it up on a higher time frame, see where we, again, as I mentioned in previous videos as well, where we are at the moment, we are moving towards our 2001 lows on WTI crude oil. And just in regards to other articles, that if I just bring that up here as well, in regards to articles from the IEA, or the International Energy Agency, what they say is that, what they said on today is that a forecast of 29 million barrels per day dive in April oil demand to levels not seen in 25 years. And they warned that no output cut by producers could fully offset the near-term falls facing the market. So what they've said here is that the EIA forecast a 9.3 million barrel per day drop in demand for 2020, despite what it called a solid start by producers following a record deal to curb the supply in response to the coronavirus pandemic. So this, again, this is when I was talking about the oil cut not being big enough, or not being my tempo. This is something that's going to be, is having a negative impact on crude oil futures and oil markets. That's a given there. But in the short term, that's, as I said, we're going to see, from what I can see here, is we are going to reach our 2001 lows. But at some point in the second quarter, we'll start to see a gradual recovery of oil prices as more and more countries start to open back up and start to produce more goods, and industries get back up to speed from what they've before the coronavirus pandemic took hold of the world's oil supply. Okay, so what they've said here as well from the IEA report is that by lowering the peak of the supply overhang and flattening the curve of the buildup in stocks, they had a complex system absorb that they help a complex system absorb the worst of the crisis. That's from the Paris-based IEA, which said that in its monthly report. Again, the output cuts, from what they're saying here, is that it won't really help so much as of yet, but we will see some positive movements in the near term. Okay, also just taking a look at another article as well to bring that up for you. Okay, so from a Bloomberg article, stocks drop with US futures and bonds and the dollar jump. So this is what I was saying last night where we saw, I showed you that reaction from the dollar. It rebounded from its level of support. If we take a look at here, so American equity indexes futures fell on Wednesday along with stocks in Europe as the risk-off mood took hold whilst investors scoured corporate earnings to gauge the impact of the coronavirus, whilst the dollar and treasuries gained. So contracts in all three major US gauges retreated after the S&P closed at a 1-month high on Tuesday or yesterday. The Stocks Europe 600 index headed for its first drop in 6 sessions, led by energy companies as crude oil in New York fell below $20 amid the global slump. So if we just have a look at the market, see where we sit on US futures at the moment. So besides WTI crude oil moving towards its 2001 lows, we just bring up the ES here. So this is what we can see at the moment. So yesterday we did see a market, a bit of a move towards the upside, but now we're seeing that on the ES that we are currently down by over 1.5%. So if I just bring up the chart of what I've put down in regards to key important levels. So this is where we have a level of resistance at 2,881. Potentially we could see US futures hit that level and then move back towards the downside. Again, what I will show you soon is the market heat map. But I just wanted to show you where we currently sit at the moment and where we're likely headed towards. So this is, again, as I said, this is where the coronavirus pandemic had started. Then we had the Federal Reserve taking action by cutting rates and also providing a lot of money in stimulus by buying up US debt, and then Congress passing a $2 trillion stimulus bill. So at the moment, from what we can see here, reaction wise, as I discussed before, that we're in a bear market rally. And the reason being is that with this trend line that I've dotted down is that we had broken below that trend line here in regards to the strength of US futures. So in the long term, or in the short term here, we're kind of holding steady, but in the long term, we do see this huge gap at the moment. That's something just to keep in the back of your mind. Okay, so if we take a look at the heat map, is what I want to show you guys of where we sit on stocks. All right, and that's what we see at the moment. So banking or financial stocks, as we can see. So JP Morgan, as we saw yesterday, some negative figures coming out for their earnings, and also Bank of America as well today. Their earnings were not so strong. Goldman Sachs earnings have come out here as well. So what we can see from Goldman Sachs, the earnings revenue was at $8.74 billion, and the estimate was $7.85 billion. So the revenue, also the FICC revenue, was at $2.97 billion versus the estimate of $2.31 billion. So they're doing much better than expected from what we can see here. So if we just have just try and find but we can see other financials as well. So what we're seeing here, so Goldman Sachs, if we have a look on the charts at the moment, what we can see, so Goldman Sachs at the moment, it does currently sit, so pre-market, it is down over 1.5%, but with these earnings that have just come out, do look for any sort of positive reaction. As I said yesterday, there's going to be a mix of sentiment or mix of reactions coming out of banking earnings, as was mentioned. As some banks, people are going to look to hold their money and keep it in their bank. That's what we're kind of seeing at the moment here on for Goldman Sachs. So that, again, as I said, expect some positive reactions for Goldman Sachs as a stock. But if we're talking about the rest of the banking sector, it doesn't look too pretty, as I just showed you here on the market heat map. Now, again, just looking at other areas, so technology was still doing well yesterday as well. Services, they were fine. Amazon ticker AMZN being up by more than 5%, or nearly, as what we can see here. Walmart, again, as consumers try to buy as much as they can of goods and services, then that's going to appreciate in value. Apple consumer goods, so they're starting to reopen their production in China, which is a positive sign for them, and that's why we saw some positive reactions from Apple, ticker AAPL. Okay, other than the economic releases that we have today for US retail sales and the Bank of Canada interest rate decision, that's what we have today so far. From the market morning briefing. It's getting a question here from Go Hill in the chat saying, what's your view on retail sales USA to come out today? So my view on retail sales is what I had discussed earlier. As I said, it's going to dwarf any other retail sale figure that we've got in the US history of the past 20 years or so. Just going back to the charts here, if we bring up the dollar again, as I said, it's where it currently sit. Markets are currently quiet. As I said, we have rebounded off of our level of support here at 106. We are up by 0.15%. So we could expect, with the negative figures, as I said, the market is being driven by the coronavirus news more so than the economic releases. So just as we had initial jobless claims and NFP results, even NFP results weren't having so much of a reaction, that could be the case here today with retail sales. If the market has already priced in retail sales coming in at much lower than expected, or coming in quite low. Now, if we do get some positive figures coming out from US retail sales, then of course we may see a movement towards the upside and a continuation of this market rebound from our level of support here. So again, I'm not expecting positive stuff to come out from the US today. So, but again, we'll watch out to see what the markets do. Just keep that in the back of your mind. That's where we sit at the moment. Okay, thank you very much for watching. Do stay safe out there with trading and also at home as well. And we'll catch you soon. Thank you.